A major investment firm is reportedly selling its commercial real estate assets. CRE execs are taking a dim view of current market conditions, and four brokerages with one name in common are merging to become one firm. Those stories and more, plus the deal blotter, next on Sibdu News. I'm Bob Woods from Sibdu with social networking and quality news and information for anyone in commercial and investment real estate. In the news, bank and financial services firm Lehman Brothers is discussing the sale of its commercial real estate portfolio valued at $40 billion. That's according to the Financial Times. The reason? To shore up a sagging balance sheet. The Financial Times quotes people who have been in those discussions as saying Lehman wants to sell the assets either as a whole or in pieces. If these talks fail, Lehman may spin off its entire commercial property division. Those sources also tell the Financial Times a gap exists between Lehman's perception of the portfolio's worth and the value potential buyers are placing on it. Lehman may have a reason to speed up its sale. Some financial analysts are predicting the investment bank may report a third quarter loss of almost $2 billion or more. Real estate analyst and investment banker Lawrence Sullivan of Chesterfield Faring Limited told Sibdu that, quote, Lehman has tremendous pressure to off-balance sheet any assets as their stock declines and their prospects are in question. Historically, over 25% of net revenues were derived from Lehman's aggressive equity and debt bets in the CRE market. Lehman quit lending in August of 2007, so their revenues literally stopped while the paper they held went down in value from 10% to 50%, depending on placement in their capital stack. Lehman now has the choice to sell off their asset management businesses or their CRE portfolio. Obviously, Lehman would rather sell the CRE portfolio, end quote. Meantime, Janice Lease, an associate broker at Prudential Fox & Roche in Philadelphia, told Sibdu that she sees opportunity in Lehman's move. She said, quote, step right up to the big top, cattle auction about to begin. And who says the little piggies do not go to slaughter? Every financial cloud has that proverbial silver lining, end quote. On the flip side of opportunity, commercial real estate executives are indicating a worsening CRE market. The latest survey from the Real Estate Roundtable shows that those execs feel that both financial market problems and the broad economic downturn are having negative effects on income-producing real estate. 84% of those responding said credit availability is much worse in the third quarter than it was 1 year ago. 51% said equity financing was somewhat worse than 1 year ago, and 23% said equity financing was much worse. Meantime, almost half of those execs believe CRE asset prices will drop in the next 12 months, and 38% say they'll stay flat. Looking ahead, the number of executives expecting market conditions to improve over the coming year dropped from 63% to 53%. What's more, very few of those surveyed believe conditions will significantly improve in the next 12 months. Three Colliers International affiliates are merging to create the largest brokered affiliate for the company in the U.S. The merger is among Colliers Pinkert of Baltimore, Cassidy and Pinkert Colliers in Washington, D.C., and Colliers Turley Martin Tucker of St. Louis. After the merger is complete, a fourth Colliers affiliate, Colliers ABR in New York City, will join the newly minted firm. Two items of note from this week's deal blotter. From our friends at Real Estate Bizno here in D.C., an almost 2,900 unit apartment building in Greenbelt, Maryland has been sold to Empire American Holdings for $275 million. The suburban D.C. property was sold by Aimco, which was represented by Transwestern, specifically Al Sissel and Scott Melnick of the brokerage's Institutional Multifamily Group. By the way, the duo from Transwestern has closed on more than 9,000 units in the D.C. area in the last 2 months. And second, the Wachovia Plaza building in St. Petersburg, Florida, now has new owners. CNL Commercial Real Estate bought the 17-story building from Parkway Properties for $26.3 million. The Class A building is 98% leased to 30 national and regional corporate tenants. This latest purchase by CNL marks the company's third commercial acquisition in 9 months. Thanks to Ken Luck of RLF Communications for passing this item along. And speaking of, when you want the world to know about your CRE news, think of us here at Sibdu. We're looking for your bits of info to share with our viewers as well as Sibdu members. My email address is much easier nowadays. It's simply bob@sibdu.com. That address again is bob@sibdu.com. Boy, even I think I can remember that address. And that's the news from Sibdu, with social networking for all of commercial and investment real estate. I'm Bob Woods. Have a good day, and I'll see you back here next week.